Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Today guys we'll take a look at the New Zealand dollar because if you remember we have prepared the weekly research a couple of weeks ago, and a bit later after just how we have prepared it, market slightly postponed the time when it has started action in our expectations, and right at this moment there was the trade on the Great British Pound has appeared, and we have shifted to this trade since it was clear and most promising among two these scenarios. But if you remember, we have expected that market probably will turn to the downside action, and it should reach the previous lows, because here we've got the bearish grabber, and we mostly speak that this probably market could start move down and taking out of these lows. But since some targets existed on the intraday charts, on the daily chart maybe slightly higher, currently I do not quite exactly remember what the pattern was here, but I remember that here was some target that market should hit, and we have explained that probably market could show slightly higher action before turning to the downside, and that has happened. But right now we are asking me what to expect from the New Zealand dollar. What should happen? What next? Well, currently, guys, the New Zealand dollar mostly interesting in a tactical point of view, because strategically, the analysis that we have prepared in our weekly research, most recent weekly research, when we have discussed the correlation between the New Zealand dollar and the dry milk futures, and how the New Zealand dollar depends on the dry milk, and there we also have prepared the analysis of the dry milk market. It was not really promising for the New Zealand dollar, and we said that hardly we should expect a reversal on the New Zealand dollar in the first half of 2015. That's why, in a strategical point of view, situation almost the same, but in a tactical point of view, we could probably expect some upward retracement on the New Zealand dollar in a short-term perspective, because on the weekly chart, this week hasn't closed yet, but probably we could get this pattern since today's Friday. And take a look. That could be the bullish grabber on the weekly chart that suggests the taking out of this top. As I said previously many times, that's not the type of the grabber that I prefer to trade, because I prefer mostly the grabber that stands in the direction of the previous thrust. But here, take a look, guys. Here and here we have approximately very similar situation. So you can see this also bearish dynamic pressure, grabber, retracement right back up, downward continuation. Maybe something of that sort we could get on the weekly chart. I do not know. But even if we do not want to rely on this grabber, on the daily chart we also have the reasons to expect upward action. So if you'll take a look at the daily chart, what we have here, first of all, here, guys, by the way, our downward action. That probably was the butterfly that we have expect should hit the target and turn to the downside. That has happened. I remember that. So right now, as you can see, market has hit daily oversold right at the monthly pivot support 1. And take a look what we have. We have, guys, perfect morning star pattern. So you can see drop down, some sort of the spike. So you can see doji, hammer, and upward action. So as you can see, we have that free candle of the morning star pattern. This is the bullish reversal pattern, as you know, and in general it has the target approximately the same as bullish engulfing. So it's usually tends to reach the length of the bars in a direction of the pattern. Or you could use, for example, intraday ABCD pattern based on this candle pattern. So that's most common approach to trading of these patterns. But anyway, here we have the bullish pattern right at the upper bar, and we could count on some upward continuation, probably on some retracement here. We will not be talk right now about the possible taking of this top, but maybe even ABCD pattern to the upside will be not small move. On the intraday charts, we have another moments. So on the 4-hour time frame chart, trend has shifted bullish. We have the reversal swing that has been formed here recently. So you can see that this swing up is greater than the previous swing down, and this is reversal swing. Usually, when the market forms reversal swing, it tends to show compounded retracement. So this usually not just one leg retracement and upward continuation, but most common downward ABCD action and then upward continuation. Now is the question where this ABCD retracement will stop. For that purpose, we probably could monitor the hourly chart. On the hourly chart, we have ABCD action in progress, and we have here confidence support. It's once at the 73.47 area, but the target of the ABCD stands slightly lower. That's okay. That's not the problem. So somewhere in the area 73.30, 73.46, we should watch for a possible. If you would like to trade this setup, of course, it's not really superb. We do not have a lot of directional patterns, but the context itself is not really bad. So in general, it could work. So if you would like to trade this setup, you need to watch for a 73.30 area around 73.46. That's an area where you should watch for a possible taking the long position, because we have in fact got this 222 Y pattern. Okay, so as you can see, thrust up, ABCD retracement down. So you can see that CD leg right now stands slightly lower, and that suggests that maybe that's not really bad chances that market will find some support and could reestablish upward action. So if this will happen, then the target will be ABCD pattern to the upside. It's approximately 75.80 probably, 75.67. So maybe market will stop at the minor target. For example, you could use even ABC bottom 618 extension, minor extension to the upside. But in this case, anyway, this will be not really small move to the upside. So that's the setup that we have on the New Zealand dollar. As the maximum target, we could probably keep in mind this possible grabber and taking out of these steps. But most reliable and most probable target is better to use this pattern as the target, ABCD. The conservative target will be with the minor extension, the 618 extension of possible A, B, C bottom, D pattern. The most common target is whole ABCD, 100% extension, classical ABCD to the upside. That's really possible, but right now we have the bullish signs on the all time frames. Here on the 4-hour time frame chart, on the daily, we have this pattern that's in fact really could market lead to the upward action, especially because market right now stands at the oversold, and the weekly monthly pivot support one has held this downward action. Market returned right back up, now stands in retracement. So that's absolutely classical setup that we have for the New Zealand dollar. Well, that's all that we could right now said on the New Zealand dollar. So let's see whether this will happen or not.